Hello, everyone. Today we're going to have Larry LaBonte from LRT discussing fee simple ground leases inside of a DST. He has done a couple of DSTs with Metric, which is the firm I work for. I'd like to introduce him. Larry, you have the floor.
Thank you, Mark. Good morning or good afternoon to everybody. Thank you for joining. As Mark said, I'm Larry LaBonte. I'm the founder of LRT Company. We are a full-service development real estate investment firm. We have been around for a while, since 1963. It was a family-started business, and we now currently specialize in ground-up development in a couple of different sectors. Most importantly right now is our senior living portion, where we have developments in Florida, South Carolina, and Rhode Island. And they all involve a ground lease structure as a financing vehicle, which is becoming very popular as it's for the reasons of being friendly to the capital stack. Ground leases, as you probably have heard of before, they've been around for a long time. About 4 or 5 years ago, they started to become a little bit more flexible. They work on smaller structures that accommodate development that are not urban or city-centric, which are usually the way that they have been in the past, where a large building was built in the middle of a city or a state, where the land was owned by a government entity, and a ground lease was used as a financing vehicle. It's trickled down into the smaller sector for non-government or institutional developments, and that's where the field that we play in, which is private equity, private ownership of senior living facilities that we have a ground lease in the cap stack. So we like it because it's the best of both worlds. We see it as for the ownership as investment. It's a nice middle ground cost-wise of capital, and allows for more capital flow into deals that are on very, very competitive terms. And at the end of the day, it makes it a more profitable deal for everyone, because it's not burdened with high cost capital that has a lot of different moving parts to it that can put downward pressure on profits. So that's the sort of the broad stroke, high level detail of what we're doing. And I'll let John speak to some of the more specifics, and then we can take some questions.
Yeah, hi, how's everyone doing today? Hope everyone's well. Yeah, I think so at LRT, we're gonna do all of our deals structurally the same way. So as you get to know us, everything we do will be structured the same way. The project might be different, but the structure is going to be the same. And the reason why we set them up this way through like a ground lease, or as Mark would say, like a fee simple deal, is it's a win-win for the developer and the investor, honestly. Why is it a win for the investor? Well, you get a predictable cash flow. There's a scheduled lease payment. So the DST owns the land outright. The DST owns the land, then leases it back to the developer at a competitive rate. So what you get is an annual distribution. It's not an estimate of what you're going to get as an investor. It's actually printed in the PPM. We're going to get this much every month, and it's going to adjust for inflation, and it's going to go up every year. So your distribution is going to be good. Like a couple of our current deals are, well over 6%. And then they adjust every year upward, which is nice for investors. And for a developer, it gives us a lower cost of loan to value cost, allows us to get better financing terms as we finish the project. And then everybody just shares better in the profits in the long run, right? So it just makes a lot of sense. As you get to know this as an investor, it's a really good way to participate in a project, and participate in a project that, obviously you get good current income and nice participation on the back end when the project is sold as well. So basically, it's as simple as this, right? The DST owns the land outright. You lease it back to the developer at competitive rates. And the benefits are predictable cash flow, obviously, and the opportunity for investors at the beginning of, you get in at the beginning of a project. A typical investment in a real estate deal, let's say you invest in a multifamily building, right? It's already built. It's already built. And you're collecting, a distribution based on what the cash flow could be of that unit and rents at any particular time. This deal, you're getting in at the beginning as we build it and develop it. Okay. So distributions, again, they're not an estimate. It's really good cash flow. And the opportunity is, once we sell the project, not only are you getting good cash flow along the way, but once we sell it, you actually participate in a pro rata basis. There's no order. You're first in line. So everybody shares equally in the profits of the deal when the deal is sold. This is how we decide to build our projects. We will always do, one project at a time. If you buy into one of these deals, it's one specific project. It's not 5 or 6 deals. It's one thing we're working on. It's very easy to understand, and you get to see how we're doing it. And we, again, we'll do all our deals this way. We have 2 of them currently open, so it's very simple to me. Hopefully it's simple to you. I don't think it requires any additional explanation in case anybody wants to ask any questions. I'm happy to open it up and then talk more about sort of our specific projects that we have going on.
Hey, John, we have a couple of questions here. Does the developer have a completion bond?
Yes. Yeah, we don't start. That's one of the first things that is required. Not only that, all the subs have surety bonds as well.
Okay, a second question from Jeffrey. When does the capital value of the land go to zero, or is the income in perpetuity? How long are the land leases held? I wouldn't say land ever goes to zero, but maybe you can address that, because these are not long-term holds.
Larry, are you there still?
Yeah, I didn't hear the first part of the question.
They were asking, when does the capital value of the land go to zero, or is the income in perpetuity?
Oh, that's a great question. The lease is a 50-year lease, but that's when at the end of the 50 years, the value would be down to zero. It would, but this is we're looking at a max 5-year horizon. So 2 years, 24 months up, 16 months to stabilize, and out. That's the exit. So we don't get into any of the back end of the lease. What happens is it gets married back to the property upon sale to the operator at an agreed upon price that we already have now. So then at that point, the lease is extinguished.
I think just a quick point, this is a fee simple side. It's not the leasehold side. So the DST owns the land. They are not, I don't think they'd ever go to zero, but the leasehold side would if you went 50 years. But once the project is completed and it's sold, the land lease will disappear. It will be wrapped into the new transaction of whoever buys it. There will be a distribution at that point on a pro rata basis on what the deal is held. You guys may want to discuss how Leesburg is handled. You have an option to purchase it at the end of the when it goes full cycle in the next 3 to 5 years. You have a cash flow plus an exit bump but can you address that? Let us know how that works.
Yeah, so Leesburg is an interesting choice. It's a senior living development. The timing is really good right now because we've gone so far along in the project. We've started the vertical build phase of the project. So at this point, it's essentially going to be about 3 years. Okay. The current income for the investors is 6.3%, goes up in September to 6.46%. And then upon exit, we already have a buyer and we already have a price. And the price will be at about a 20% premium to the DST owners. So what I would say is, as an investor, in 3 years, you're going to have your money out, and total, if you did an annualized return estimate, it'd be somewhere in the 12 to 13% range, based on the calculations of everything we already have defined. So as a developer, our idea is to have the land, entitle it, do everything to it, build the project, sell it, get the money back to our investors, share equally with our investors any profits that come. I don't know if they answered your full question, but that's sort of where we're at. But that's how we're going to build all of these. They're all going to be designed to be about 4 to 5 years total time in the project.
So just so they understand, if you had $100,000 investment, they'd currently be getting a monthly distribution on $6,300 a year.
Correct.
Divided
by
there will be a
12,
bump
paid monthly. Yeah, paid monthly.
Then at the end of the offering, when it goes full cycle, they would get $120,000 back on that theoretical $100,000 investment.
Correct.
So it's distributions plus the bump on exit.
Yeah, the increase, the buy price does not include the income you received along the way. You know, that's a premium in and of itself. That's just a predetermined strike price that we've talked about with the operator that's going to buy the property or the project, if you will.
Okay. Larry, can you tell us a little bit about your background? I know you've been in this business for 30 plus years, but can you tell us a little bit about?
Absolutely. I have been in the real estate business on development side, acquisition side, finance side, and all multifamily, senior, and industrial. So I grew up in the business, and have been solely just dedicated to the industry itself. And one of the things about being singly focused and having a business that you stay in is that you tend to cultivate a lot of relationships. And if you're around as long as we've been, or I've been doing it, we have a lot of relationships that we rely on, that we can trust. And at the end of the day, that's really what gets things done, especially in today's world. So not to get too granular, but after college, I was started out in maintenance for a large project in Boston. So I started literally at the bottom and went through up to property management, to asset management, up to being a general manager for a developer in Chicago, doing almost $1 billion in condo conversions in a 9-year stretch. And after that, worked for a family office that was represented the United States Bankruptcy Court in troubled assets. My father was a trustee for the court. So that gives me, I think, a pretty healthy perspective that I and the others that work for us have in the industry. and helps us make pretty sound business decisions, as well as creating a healthy a pipeline of deal flow and projects. And most of what we have are off-market transactions, private transactions, or we've owned property, we own the asset, the land for a number of years. Our Leesburg, Florida deal is we've owned that in some form of partnership since 2007. We have a large project outside of Hilton Head, South Carolina, on a 100-acre site. We have owned that since 2006. So I think that hopefully would give some insight as to currently where we are, where we came from. And you can imagine everything in between. It's a tough business. It's a nickel and dime business. And you have to put things, put projects together smartly. And we think that this ground lease structure is very smart because it really helps everybody involved in the process do very well. And we look forward to having several more successful ones.
Hey, Larry, quick follow-up to that. Who will be managing the senior housing facility in Leesburg?
That's Validus Senior Living out of Tampa. We have a previous relationship with them. They are a industry gold standard in Florida. At least they've got 20 facilities full cycle that they own and operate and manage. And their specialty is the stabilization period. They don't acquire assets or do deals that are existing. They do ground up and lease up. So they will be on site in a couple of months with a trailer in Florida doing pre-leasing. And that's why we have them. It's getting over that initial hurdle that can make or break a project.
Hey, we have a question from one of the people on here. What is your end buyer look like? What can you tell us about?
It's Validus Senior Living.
For Validus, okay.
Validus is the buyer.
I'm assuming we do not have anything like that in place yet, but what can you tell us about that?
I'm sorry, what? You assume what?
I was asking if they asked if you have an LOI or a contract with Validus, but wanted to see how you've worked with them in the past. When would you put this under contract with them?
We'll be in contract after we figure out the fair market value when we are entering the stabilization period, because we're doing the heavy lifting, right? We're the ones that have the permits to the land, whether we do the entitlements, we take on the development risk, we wipe that off the board so it doesn't exist when we bring in the private capital. It's really in the trenches, and we have a opportunity to have a sale price that's higher than what we've agreed to, and that's where we left it open. So when we get the property valued and appraised, we'll have if it's more than what the agreed to price now, then we are allowed to increase the sales price. So that's when we would be able to do that. And if there is for lack of a better term, an issue with them buying the property, we would have, I can tell you right now, no less than 5 offers new senior developments are at a premium.
Okay.
And they will be going forward. There's no, the exits are exits are multiple. If there's any issue with the ability of the buyer to buy, I get calls monthly offering to purchase as is or as completed. So that's a little bit of a long-winded answer to that, but I wanted to impart on the folks that are here with us today that the market segment that we're in is a very is extremely healthy.
Well, Leesburg is about as senior housing as housing gets. It's surrounded by the villages, which is like the epitome of senior housing. But we'll follow up to that. Basically, when these investors invest, they're locking in because you have an option price at a 20% premium. So their risk is you exercise the option. In order for you to move the property, you have to exercise the option. I think that probably is a better answer in terms of how the DST investors get out.
Oh boy,
you exercise the option.
Yeah, all right. I hope I didn't misanswer the question. If that was the answer.
No, I get it. I get your point. You want to convey that there are buyers for this property, but I know Vidalis being they've got 20 properties now or something like that. This is probably the exit strategy. They're going to buy it. They're going to get it up to performing, 90% plus occupancy, and then exercise a purchase agreement. But from the DST perspective, I think in this particular deal, it's a 20% bump on exit. That's the play. It's not, hey, we're going to give you 300%. That's not going to happen. But it is something where you're making distributions, you will then give a bump on exit. It's a short-term play for a DST investor.
Right.
That's how
there's appreciation that as the property is being developed, every dollar that goes in, the land, the value of the asset, the building itself and the land goes up as well. And it is the philosophy to allow the DST investors to share in that upside, because it's really the first taking of the appreciation of a property that is put in service, and it is the one that will yield the appreciation that you wouldn't get in an existing asset where it's been picked over through several investment cycles. And that's why we think it's kind of neat.
Well, I would agree with it. If anybody's interested too, we have, I believe you broke ground last week, 2 weeks ago,
2 weeks ago.
Like that.
Yeah, I would encourage everybody to take a look. Maybe we can get a graphic out to you. It's almost hard to understand the amount of development that the Villages is doing in Leesburg. They're building probably maybe $1 billion worth of real estate for single family over 55 homes, which is a feeder to us within a 1.5 2 mile radius of us. They're doing 4,500 new home sales a year. I mean, it's like every 2 or 3 years they're building a small town. It's quite incredible, and it's right all around us in a complete radius. They buy 500 acres at a time from the town. It's really fascinating, actually. So we're right in the heart of it, and it's exciting that we were able to get the shovels in the ground and have our groundbreaking and get going and get vertical.
Do we have any other questions? Anybody else want to ask anything? Well, it looks like we're good. Larry, I appreciate your time. Thanks, John, for jumping on. And if anybody needs anything, oh, hold on. Jeffrey asked, is there a written prospectus? Yes, there is, and I can send it to you. I'll send it to you by email. I'm going to put up my email address, so if anybody wants to take it and ask for anything, additional information or anything like that, they'll be able to do that. And there we go. Yeah, I can send out, flyers. I can send out the PPM. I can send out pictures from the groundbreaking. I believe I have those. If anybody is interested, but yeah, I appreciate your time, Larry. I appreciate your time, John. And if there's anything else, let me know. My email is mark@metric-financial.com.
Hey, yeah, before you go, Mark, just so I don't do this wrong. There's because this is the first time on this doing it with the chat. I have several questions that are directed to me, or I have the after the meeting. Do I have the ability to respond?
Sure. Somebody emailed you or texted you?
Yeah, it's in the meeting chat on the screen. I just don't know if it's going to disappear after the meeting closes.
Larry, these questions will disappear if it has been directed only to you. So you might want to keep a screenshot or maybe copy them somewhere. I will share with Mark the meeting participants so you can respond to them later. I mean, I would highly encourage everyone to put everything not directed towards one person, but to everyone in the chat so that we can see it on the screen and it's recorded for future use as well. But for now, Larry, if it's directed only to you, this will go off once the meeting gets disconnected. So.
Okay, I think I figured it out.
Okay, all right.
All right. Wonderful.
Well,
okay.
I appreciate everyone jumping on here, and feel free to reach out if you have any further questions, and I appreciate your time today.
All right, you're welcome. Thank you.
Have a good day.